Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, September 12th, 2016. It's really hard to kind of make sense of this whole market. We had on Friday that everyone was kind of nervous about the Fed raising rates in September. That had to do with the ECB not doing what the market anticipated and blah, blah, blah. And from there, we saw a 50-point sell-off. It took one day, 150-point sell-off for the Fed governors to come out and start saying that they don't believe they're going to be raising rates in September. And from there, we saw at one point, a 35-point rally. So then you have this all kind of lined up. And what I kind of find comical is that then you get your perma bulls that are sitting there saying that if the Fed raises rates, that the market is going to go up because it's always done that in the past, which in the past, if you were checking oranges or comparing oranges to oranges, yes, I would be saying the same thing. I've always said that when interest rates rise, so is the stock market, because it means that the Fed is trying to cool down the economy. So that means that the economy is strong. But they've kept rates near the zero line for an extended period of time. So if they start raising rates, it's not going to be because of the economy. The zero rate or the low interest rate is actually what's killing the economy, because the banks aren't really lending things out. They're not taking risk on it. And from that, so if they start raising rates, it's you can't sit there and compare the previous moves on that, because the Fed never held rates down for this long at these levels. So I have a feeling they're going to be wrong, but that really has nothing to do with anything. But right now it was this move was pretty massive today. It's amazing how just the little bit of notion of they may not be raising rates just causes a massive short covering. So we made it. We closed at 21.59. You can see we have one of the moving averages right here, the 50-day, that is at 21.65, and that's also resistance. But the reason why I wasn't really let's say shocked about when we had a rally today was I'd mentioned in the morning notes that if the S&P took out the 21.23, there was going to be a reaction trade down to 21.13. It made it, I think, to 21.15. But this is a support area. I've been showing this is this has all been support. So when it bounced, it made sense. No, but notice the technicals haven't even budged yet. So yeah, I was expecting a bounce. I still think it's going to fail, and we're taking out these lows. But I didn't anticipate that the rally was going to be, at 1.35 points higher. That was kind of blindsided. But in any case, so it made sense where the bounce happened. The move up 35 points really didn't make sense, but that had to do with, the central bankers just trying to cause these short squeezes, because the only thing that they really can manage right now is the stock market, because they've lost control of just about everything else. And they can't lose this game, and because it's the only game that they have in town. So anyway, you can see big rally here, but the technicals they just started moving down just now, and it's that's the thing where I'm saying with these bearish divergences, very extended levels, and actually the bearish pattern has me believing that this is just your temporary low. They're squeezing out the weak hands right here. We're running right into resistance now, as you can see. I'll show you on the other chart, but we're running right into resistance, and if that fails, all these people that just got caught buying into this rally and all the shorts that just squeezed are now going to be jumping over each other to try to short and get out. But it's just moving so fast that I can't sit there and really just pound the table that there's this many people that just jumped into the market from Friday till today, just because it has to do with no possibly no rate hike, but it's just because it's just moving too fast. So to me, it doesn't feel like it's real. This was just algorithms that were going nuts back and forth and squeezing longs as well as squeezing shorts all in one day. And I don't think it was any, there's really nothing has really changed on that end. So as I said, we are running into resistance, and you can see that the resistance would be these lows here. So it made it through some of them, but it really right around to where things got pretty heavy, because you had a low and a low. So this is some pretty strong resistance. Plus you had all over here. So if the bulls can push through this, say the highs that we made today, then what's going to happen is it's probably going to be a reaction trade up to the 2171. And one thing that I've said that this trade has worked 100% of the time, and that's this gap is going to get closed. Now, my thinking and what I'm really, really kind of hoping for is that we head back down, take these lows out, because the reason why that would be better in my eyes is we're going to be able to get long someplace down into the 2090 area, with a very good chance that we're going to come up and close this gap. So it'd just be more points to the upside. So, maybe they're going to shoot to try to close it first. It's hard to count anything out in this market because, like I said, it's all in or all out. I just don't think it was long enough to get everybody out, and now they're going to be able to squeeze shorts and stuff, because there just wasn't enough time on Friday for the shorts to really load up. So anyway, like I said, we have this resistance right here at 2160. If they get through that, then we're going to go up to the 2168, possibly up to the 2173. That would be the next resistance. We have 2169 and then also 2176, which is the moving average resistance levels there. So one of the reasons why I'm really thinking that these are not the lows is you can see we have zero bullish divergences in place. So if we had another trip to the downside here, that would most likely trigger some bullish divergences, and from there I'd wouldn't be against looking long, but I just think that there's still more work that needs to be done before they are out of the woods. So here's just the resistance zones that I was showing. They went right through the beginning of it here, but they failed right above the 200-day moving average, and this is on a 15-minute chart. You can see anything that was sold yesterday is now getting pretty close to overbought. And like I said, if they can push it through this resistance here somewhere in that 2161, then you almost have to anticipate that they're going to come up somewhere into this 2171. And if you remember, this is areas where we gapped up and then we gapped down. So we have space right here where no shares have been traded for since the September 2nd. So I've seen that stuff happen a lot. I don't really know what it means, but in any case, there's a void on the upside here and a void on the downside. So right now I'm kind of leaving the door open that they may try and move it, push it a little bit higher tomorrow into the heavy resistance. And if they start getting, through these, then I would anticipate that they're going to have a gap fill. But overall, I still believe this is just setting up for a larger move to the downside. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.